Good morning, everyone. Today's Friday, December the 14th, and this is the Futures in 5. My apologies for not having the video up today. I've had a number of technical difficulties, and so I'm sort of running behind. It takes a little bit of extra time to get all these things together for us. So let's just jump right into what's happening. We've got a contract roll, and we are taking a look at the current contract expiring in March that we're now looking at. We can see this is a very clean line. But we can see that overall we still have a very bearish slant. This is my automated trading platform that is showing that the slant is still bearish, but we are in a bottoming formation that is towing the line somewhere around here. So we can see auction profiles in the time price opportunity tool that give us congestion right here around the 2635 to 2636 area. That's going to be important for us to hold because we are in a bottoming space. Our first pass bounces are going to fail. So we want to be very, very careful using our levels approach here, realizing that we must pull back into higher supports before our charts break down. Pardon me. This is a big number, 2625. It is present on a weekly and monthly chart, and so I'm going to shift the guide properties up here to make this just a little stronger so that we know it's a big line in the sand, and you can see the bottoming from here moving up. We'll see if we can try it from here again. It probably will be a little bit sloppy. Here's the thing, if a Santa Claus rally is coming, this following week is going to be the highest probability of that event, and we'll know that it can hold it if it can breach forward and then pull back and hold the higher lows. Be very, very careful in this space. Taking a look at the NQ, same sort of thing. This rally space really much lower. It's done a pretty good job of bouncing off of this region here. This is that primary zone that we would see essentially in, let's see, we'd see it essentially in our weekly slash monthly chart. So it is fairly important. You can see that we're well above that, moving through this area of price acceptance. Again, this is the price, the time price opportunity tool out of Motive Wave. Our system tells us that we've got negative drift in the support hunt ahead and the isolation of recent resistance. Old resistance in our formations also give us this area as a primary support zone. So this mechanic, which will be available shortly in Motive Wave, uses motions that are really solid. I'll just say that. So now we're looking at momentum pulling us up into this narrow range and then potentially fading. Again, tech has done a fairly good job of recovery. Some of our big numbers really got beat. Our big techs got really beat up. They are holding. What do we want to look for? We want to see that we hold 66.96. Have we been holding it? Well, I mean, if you want a 20-point stop, you can have that. My thought is, let it get up and over here. We know it's going to reject here in the space. If you want to trade that, you want to get into a very tight time frame. This is a bearish motion. We're going to have bounces that fade, and then if the higher lows come, it's able to send us into a more bullish trending space. This chart got absolutely, I don't know, remember, what are those things that they, a cement blaster, you know, like how they get graffiti off walls? That's what happened to this in this space, just savagely moving down and then moving back up. The one who really got destroyed is the RTY. We don't really have time to talk about the RTY, but it's really been destroyed. This, however, very big bottoming formation. You want to take a look at that one. That one's got real heat on it. The problem is, because it's got such negative divergence, first pass bounces are definitively going to be sold and then moved up. Here we're looking at two different areas of support. This entire region, of course, you can see the thin volume from the lighter actively traded futures contract. And so now what we're seeing is, what do we need to do? We need to get up and over this edge. Are we holding our baseline support? That would be yes. We're not really breaking down per se this morning. We are holding these highs, but because we are coming off of a fairly negative drift, people are going to be thinking, all right, my first pass is going to be into resistance. They're going to try and shove it down. There are a lot of people that are very bearish on the market, but momentum drift is telling us that it's going to hold these edges. We want to be really careful. This is another one that is going to be sideways to upside in terms of its motion. It's got a bottoming formation, but it's still very, very noisy. And there are lots of extremely aggressive trading mechanics set in here. Now take a look at how different this looks compared to this. See, these are the prior months. You see how thin the volume contracts are here? When we look at these, we can see there's strong trading through the contracts as we continue to move forward. That's because traders will use several months of expiration in order to hedge themselves depending on where they're going. So there's a tremendous amount of activity sitting here. The big thing is we're up over these initial breakout levels from the past, and so pulling back, which we should because we are at congestion, pulling back to higher lows at around BPOC, that's 52.27 or so, going to give us upshot. Guess what? See this momentum? That upshot tells us it's still going to fade. What we are is in a very noisy patch here, very, very noisy patch. And so that's what we have to look for, the break of the resistance zone. Look at the edges to reverse our patterns. All right, that's what we'll be looking for. Okay, taking a look here. We've had this area for a while. 38 is a big break. This is another reason I'm thinking, you know, we might have ourselves a little bit of a Santa rally. That is essentially why I'm thinking that gold is doing this, but the dollar is also on the rise, which also gives us a little bit of a bearish tone based on what we are looking at in the charts here. Is it likely to bounce here? Well, of course it is. That's a support zone. That is price rejection, thin volume profile. It collapsed very quickly. We also happen to be moving up into a brand new high in the dollar. That is usually going to be met with a little bit of a fade, which will give this a little bit of a bounce, which will end up moving wherever it is that we're going. Overall, our bounces are going to lead to selling pressure here as we've broken through a very important area of congestion support. And so this is going to be the line in the sand for us to look for big recovery here in gold. Good luck trading today. Probably going to be messy. Fed meetings begin next week. We get the release on Wednesday. We get all the Fed speak. Going to be very interesting. Take care.